Which is better, renting a home or buying a home? The idea of owning your own property has long been the cornerstone of the American dream. That same sentiment is shared in many countries around the globe. A 2018 study showed that 90% of millennials want to own their own home. After all, renting is just dead money, right? But in this post-pandemic era, for many, the question of whether to rent or buy isn't a question at all. We are Generation Rent, priced out of the housing market, paying extortionate rent. So here's what we're going to do. First, we're going to discuss the research behind the rent versus buy decision. Second, we'll talk about the realities of the property market in 2022 and how the question of rent versus buy isn't a question at all. And finally, we'll speculate on what the future might look like for housing. If you find this video useful, show your support by leaving a like, and if you want to see more content like this in the future, don't forget to subscribe. Let me know in the comments whether you're a renter or a homeowner. The research around the rent versus buy decision is inconsistent, to say the least. For example, the paper The Financial Returns from Buying versus Renting: The Experience of First-Time Buyers in Different Regions of Britain found that for those who can afford it, all roads lead to buying. On the other hand, the paper Lessons from Over 30 Years of Buy versus Rent Decisions: Is the American Dream Always Wise? Found that renting was the better decision, provided renters invested their excess savings into an investment portfolio. My original idea for this video was to discuss the findings of various research papers in order to answer the question of whether renting or buying is the better option. But it's clear to me now that differences in timing and geographic location makes it difficult to give a concrete answer. Paper A notes that even in times of poor economic and housing market conditions, people still obsess over owning their own property. Home ownership is associated with security, freedom of design, greater sense of community, and better school performance among children. Financially, home ownership offers long-term tax-free capital gains, but more importantly, it satisfies the perception that money isn't being wasted on rent. The idea that rent is dead money comes from the fact that, unlike mortgage payments, as you pay rent, you gain no further ownership of the property. Both papers accept that when the costs of buying do not materially exceed the cost of renting, then buying makes sense. This is measured by the price to rent ratio, which compares house prices to rent prices. The lower the ratio, the more profitable it likely will be to buy rather than rent. The issue is that this ratio will change at different rates depending on where you live, hence why geographic location is an important factor. Home ownership also protects you against future rent increases, but exposes you to interest rate risk. Paper B notes that because there's this universal acceptance that buying is better than renting, it's much more likely that house prices will rise to levels where they are fundamentally overvalued. At that point, renting can be the better alternative economically, but again, this is predicated on the renter taking the savings that they made from renting as opposed to buying and investing those savings. If the renter spends the savings on non-wealth generating items, then the benefits disappear. The benefit of home ownership is that it forces individuals to save for a down payment, and once that down payment is in place, they're generating wealth over time. But with renting, wealth creation requires constant discipline on a month-by-month basis by the renter. Let's address the elephant in the room. House prices are insane. In the US, house prices went up by over 18% between December 2020 and December 2021. This is great news for current homeowners and not so great news for prospective homeowners. In fact, the typical profit on the sale of a US home is up 71% since the pandemic. This isn't unique to the US. Across the EU, house prices are up by 39% since 2010, with the likes of Hungary, Estonia, and Luxembourg seeing price increases in excess of 100%. Jeremy Grantham believes that we're currently in the broadest and most extreme global real estate bubble in history, and his rationale is the price to income ratio. This ratio measures housing affordability by comparing house prices to household incomes. If house prices increase at a faster rate than household incomes, they become unaffordable. Across the OECD, price to income ratios have increased significantly since 2015, with the US, New Zealand, and Canada showing ratios well above the OECD average. In fact, US house prices in 2021 increased at a faster rate than prices during the housing bubble of 2006. However, unlike the housing bubble of 2006, which was propped up by bad mortgages, the issue today is supply. In December 2021, the number of homes for sale in the US was 910,000, which is the lowest number on record since 1999. Demand for houses is far in excess of supply, which naturally leads to an increase in house prices. So long as supply continues to be an issue globally, house prices will continue to increase. And if household incomes aren't increasing as well, then houses will remain unaffordable and overvalued. So why don't we just build more houses? Building houses has become increasingly expensive. The National Association of Home Builders in the US reported that the cost of residential construction materials had increased by 19% since December 2020. Data from Europe shows a similar trend, with construction costs increasing rapidly between the start of 2020 and the end of 2021. Increasing housing supply isn't as effective if the supply isn't affordable. So an increase in supply in the short term likely won't do much in the way of affordability, especially when mortgage rates are considered. Part of the reason why house prices accelerated so quickly during the pandemic was because it was cheap to borrow money. Long-term mortgage rates in the US declined by 46% between the end of 2018 and the end of 2020. This was largely due to the Fed buying billions of dollars worth of US Treasury bonds on a monthly basis. That buying activity drove down Treasury yields, which influenced mortgage rates. The Fed is now well into its asset purchase tapering program, which essentially means they're reducing their buying activity to zero. The effects of this can already be seen as Treasury yields begin to rise, resulting in US mortgage rates increasing on a near weekly basis, returning to highs not seen since before the pandemic. In theory, rising mortgage rates could slow the growth of house prices, as fewer buyers can afford the higher mortgage payments. Equally, rising rates spell bad news for overall affordability. In Europe, the European Mortgage Federation showed a peak growth rate of 31% in the volume of mortgages in the second half of 2021, indicating a strong demand for housing. But as yields increase across the EU, so too will mortgage rates, which again could slow demand. Income stagnation among potential home buyers is a big problem, especially in the current inflationary climate. The millennial generation, defined as those born between 1981 and 1996, has been said to be the unluckiest generation in history from an economical perspective. This generation is characterized by lower earnings, lower wealth, and delayed milestones, including home ownership. Millennials are trailing where Gen X and baby boomers were at the same age by between 5 to 10% in terms of ownership. Nearly 45% of people aged between 25 and 29 in Ireland are still living in the family home. Since the 1980s, house prices have advanced by 230%, whereas wages have only increased by 100%. The mistakes of predecessors haven't done millennials any favors either. Since the Great Recession, strict macroprudential regulations limit the amount of money that banks can lend to borrowers. While this may be in the best interests of the financial system as a whole, many borrowers would argue that the restrictions make purchasing a home near impossible. In Ireland, the maximum mortgage that a borrower can obtain is 3.5 times household income. But because house prices are accelerating faster than incomes, this restriction makes home ownership all the more unlikely. Because of this, many millennials, among other generations, are forced to rent. In most European countries since 2010, house prices have grown at a faster rate than rents. This isn't true for Ireland, where rents have increased by nearly 70% since 2010. In the US, rent prices are at an all-time high. Renting a 2-bedroom apartment in the States is over 14% more expensive now than it was in January 2021. The median rent for a 2-bedroom apartment in New York increased by 27% last year. This makes housing a catch-22 situation. Young people can't purchase their own home outright because A, down payments and or mortgage payments are unaffordable, or B, the rules dictating mortgages won't allow a loan to be made. Consequently, the young person is forced to rent. But in countries like Ireland, where rent prices are growing faster than housing prices, the cost of rent alone is a hindrance to the individual's ability to save money. This results in the individual being in a position where they're no closer to being able to buy a home. For the 55% of people aged between 25 and 29 who are not living in the family home, this presents a dire situation. It's at this stage we realize that the question of rent versus buy for many isn't a question at all, at least in the current climate. All of this is before we even consider inflation. The cost of living continues to rise as Eurozone inflation hit a new record high of 5.1% in January. And the latest inflation figures for the US are expected to be as high as 7.2%, the highest since 1982. When the cost of living is increasing at a faster rate than wages, future prospects for home ownership dwindle. So what does the future look like for housing and the buy versus rent decision? Supply and affordability are the crux of the housing crisis. Housing initiatives to increase supply will be at the forefront of many government policies going forward. Ireland's Housing for All plan, for example, plans to add 300,000 new homes to the market by 2030. The success of such policies are of course dependent on execution. Supply alone is not enough to solve the problem of affordability. Materials inflation, rising mortgage rates, and wage inequalities all impact on affordability and are largely outside of national government control. Every country is in a different position when it comes to housing, as indicated by the large degree of variability in the price to income and price to rent ratios. Researchers agree that when the cost of buying does not materially exceed the cost of renting, buying is the preferred option. But there's a slew of both financial and non-financial factors to consider. For those fortunate enough to have a choice between renting and buying, the answer will depend on the price data from your country and what your own present and likely future personal circumstances are. But one thing is clear: the longer this problem is left unchecked, the higher prices will go. And as the growth rate of house prices and wages continues to differ, the more unaffordable houses will become. So I really do hope you enjoyed the video here today. As always, if you did enjoy the video, please do let me know in the comment section below. Leave a like on the video, subscribe to the channel, and I'll see you in the next one. Cheers.